There's never been a better time to invest in property, according to property investment expert James Fitzgerald. He joins me live now. Hi, James.
Hi, Alana. Thanks for having me.
Thanks for joining us. Look, we've heard a lot about the property market, particularly over the last 12 months. Some are saying hold on, some are saying get rid of it, some are saying buy now, some aren't. What is your view on this?
Well, my view is this is probably a once-in-a-lifetime or even generation opportunity because we've got the lowest interest rates we've ever had. And in fact, they're half what they were this time last year. So, you know, $1 million home loan costs you about $400 a week in interest today. Would have been about $800 this time last year, $1,250 this time during the global financial crisis. So that's pretty significant. So in my point of view, that just opens up so many opportunities to get into the market. But then also, if you're an investor, you've got opportunities today where you could be renting it for 4.5% when your interest rates are only 2.5%, 3%. It's really something that is very unique and probably won't last.
Well, it's an interesting one in that, does this depend, I guess, on which capital city you're talking about? Because obviously in Melbourne, we're seeing vacancies on rentals like sky high at the moment. Obviously, we've had a lot of lockdowns. There's a lot of people that have left Victoria. There's international people that haven't come back, like students and stuff. So how does this sort of play out state to state?
Look, I think you make a great point. I certainly think that Sydney, Melbourne, Brisbane, Perth, Adelaide, the big CBDs are a little bit better protected than some of the regional areas. I will say, though, that you're right. There's a real glut of vacancies in the high-rise apartment sector of the market. House and land in the outer fringes, it's almost gone the other way. I mean, we're seeing vacancy rates in Brisbane, Adelaide, Perth, and some parts of outer Melbourne and Sydney, which are 1 to 2%. So to put that in perspective, it's normally 3% is a balanced market. But you're right. In the inner city high rises, we're seeing vacancies up to 11%. So I guess you just got to be careful exactly where you're looking to buy. I'd certainly be saying house and land in the outer fringes is the safer bet today.
And how do you sort of see this playing out, I guess, post the pandemic? I mean, is the CBD dream dead? Are people finally going, okay, well, we can have the space. We know that regional is going gangbusters at the moment. Do you think it'll swing back the other way? Do you think that this purchasing regional is just a fad? Or do you think people are really going, okay, well, we can be flexible with our working arrangements now. Let's get out and have the sea change?
I think that is here to stay. I think you're right. I think we're going to see working from home maybe not be a 5-day-a-week thing, but maybe 2 or 3 days a week. I think that is here to stay, and we're certainly seeing that at the moment. It's the middle and outer ring property markets that are really almost on fire at the moment, seeing listings down as much as 20% in some of those areas. So, yeah, Alana, I think you're absolutely right. Maybe for the foreseeable future, apartments in the inner city is something that as an investor you probably just want to steer clear of and play the safer bet, which is that middle to outer ring, where you're probably pretty safe given that I think working from home in some capacity is here to stay for the foreseeable future.
So let's talk, I guess, about some of the benefits then for first home buyers, buying something for a future investment. What are some of those?
Yeah, so look, for most first home buyers, it is a stepping stone to be able to get into the market, force yourself to save a bit, maybe even see some growth in the property, and then upgrade over time as you earn a little bit higher income. So in that sense, not to back over it, but again, it's a once in a generation opportunity. We're seeing the $15,000 still available from the federal government in the home builder stimulus. Most state governments are offering $10,000 to $15,000 on brand new homes. Home builder applies to significant renovations. The first homeowner incentives in the states of $10,000 to $15,000 applies to new homes, and you get stamp duty concessions. So when you add it all up, it's $30,000 to $40,000 that the state and federal governments are giving you today, which you never have to pay back. Which are $30,000 to $40,000, is a significant head start when it comes to getting into the market, particularly when most banks require you to have about 10% deposit. So you're sort of halfway there, depending on where you're buying.
Well, it certainly is food for thought. James, if people want to find out more, how can they contact you?
just head to our website. We have a bunch of education. We've got webinars, the whole lot. So www.custodian.com.au, and you can engage with us in whatever formats.
Fantastic, James. Thanks for joining us here on the program. All the best.
Thanks, Alana. You too.